And that's why I think you're seeing a different narrative unfold amongst these banks, that maybe the game is over and survival would mean breaking ranks and covering and getting out. You see one of those European banks do that, and then the whole game just implodes as the price.
You're watching Silver News Daily. Subscribe for more.
It's happening. The most explosive event in the silver market's history is now unfolding, and almost no one is ready. In just 2 days, a staggering 42 million ounces of silver were demanded for delivery on COMEX, shattering records and setting off alarms across Wall Street. This isn't just a supply squeeze. This is the unraveling of a decades-old illusion. The paper silver game is over, and the physical market is now in full control. But here's the part that's truly shaking the system. Behind the scenes, a single Asian trading entity has just placed a jaw-dropping order for over 400 million ounces. That's not a trade, that's a takeover. And as the metal vanishes from vaults in New York and London, the lie at the heart of Western price manipulation is being laid bare. The COMEX has been exposed as an empty box, promises without the metal to back them. Banks are scrambling, vaults are draining, and analysts are now projecting that silver could explode to $96 by year-end, and potentially hit $605 as the true value of real, deliverable silver is finally unleashed. This isn't hype. This isn't theory. This is the beginning of the end for the manipulated silver market and the birth of a new era led by physical demand, global power shifts, and monetary rebellion. So how did we get here, and how high could silver actually go? Let's find out.
It is only 2 days. Well, today's day 3. I don't have the numbers yet, but 2 days into the December delivery month, and there's already been 23,970 gold contracts that have stood for delivery. That's 2.397 million ounces, and plus 8,305 silver contracts, or 41,525,000 troy ounces issued and stopped so far, and the month has just started. It's also relevant to note that in November, which I would say was not normal, the silver deliveries ended the month at just under 20 million ounces, about 19.7 million, which it's really crazy because November is not a scheduled delivery month for either silver or gold. There was 1,267,000 ounces of gold delivered. Issued and stopped is the correct terminology. But the first day, this month, the December contract, day 1, we saw 7,330 contracts stand for delivery in silver, which is 36, almost 37 million. That's more than $2 billion worth. And although it's not a record, it's close to it. April was the biggest record of just under 12,000 contracts. But to see a 2-day, that's day 1 and 2-day obviously added more, but it's just insanity, where there's already been 2.4 million ounces of gold and almost 42 million ounces of silver delivered in 2 days. This is the same type of volume that we've seen all year long. And, it's funny, you and I started talking about this in 2020 before anyone did. And now it's just mainstream mainstream in our business. And I think this will continue until it doesn't, meaning until stuff is just depleted. And it's becoming more and more obvious that this is an imminent deal. At the same time, you have one of, if not the largest short position in COMEX futures market, along with a massive short position in SLV, one of the largest ever. And at the same time, you have the LBMA, which is running on fumes. And, it's a situation where the delivery via mechanisms are breaking down. Almost 90 million ounces have been delivered off of COMEX this year. And, since October, pardon me. And I don't know, since October 1st, 90 million, it's accelerating at a level that I don't think people understand or take for granted. And I think the way that you break that up is just to simply say that, let's make an analogy, right? For years, everyone pretended that let's call it a cardboard box was full of cookies. There's a picture of a cookie on the outside, and the thing of it, and they would trade them.
The dam didn't break overnight, but the pressure's been building for years. Behind the scenes, the COMEX has been bleeding silver at a pace that even seasoned insiders are calling unprecedented. Since October alone, more than 90 million ounces have been delivered, a figure that would have seemed unthinkable just a few years ago. And now, the cracks are visible to everyone. COMEX inventories, once comfortably sitting above 100 million ounces, have plunged to barely 35 million. That's not a system functioning normally. That's a fire sale. For decades, the entire paper-silver market has operated on a fractional reserve model, where contracts were traded like physical metal, but only a fraction of them were ever expected to be delivered. But those expectations are collapsing. Physical holders are now calling the bluff, standing for delivery and draining the vaults at warp speed. And what's truly shocking is that it's not just investors doing the grabbing, it's industrial users, refiners, and sovereign interests. Everyone wants the real thing. With each passing month, more metal is pulled from New York and shipped eastward, never to return. And as the West clings to a system built on promises, the physical market is staging a full-blown mutiny. What we're witnessing is the slow-motion implosion of a paper empire and the rise of a new silver reality, where actual metal, not digital contracts, dictates the price.
But now everyone is saying, no, I want the cookies. And people are realizing that the box is pretty much empty. And when that happens, this pretend cookie game, which you could call the derivatives, falls apart. And real cookies, gold and silver, become much more valuable. And that's why prices are rising. And why the dollar and other currencies may look weak when the truth comes out. So, yeah, I think it's a big deal. There was this report that JP Morgan shifted its offices to Asia in the middle of the night, that they were told that the people had like 5 days to move their family and everything to Singapore. I believe that is false. So everything that I'm reading tells me that that's not true. I guess we'll find out and we will see, but I know a lot of people have been asking about that. The bottom line, then again, to me, is that the market runs on trust. And when you believe that you'll get delivery of what you were promised, and that trust has been built up over decades, then the system works. And you buy a contract, you can stand for delivery. The metal's there. That's why COMEX has set the price of gold and silver forever. And the analogy is like a bridge that handles a whole bunch of weight until it doesn't, like the 35W bridge in Minnesota that collapsed that I drove over 5 million times. And you're seeing that in London. You're seeing that in the COMEX now. And I don't know. I think that this is going to be a story that gains a lot of traction over the coming weeks and months. I think that the price of silver is just beginning. I really, truly, truly do. And that nonsense of a outage, a glitch and an outage of air conditioning at the CME, a cooling failure, is a bunch of crap, because only the metals markets went down. You know, the other CME markets, like the bonds and the FX and the repo and the equity futures, well, they stayed online. It was a technical failure isolated to only one asset class, and low volume that day, yet the whole thing went down. To me, it just is telling you that things are breaking. And I don't know. I think that this is just the beginning. We saw 12.5 million ounces were transferred out of the COMEX registered category on November 26th. So, you know, where's it going? Who's buying it? How caught are they? These are the things that I would be focusing on right now.
The illusion of abundance is crumbling, and the truth is finally being dragged into the light. For decades, COMEX has operated on the myth that there's always enough silver to go around. That no matter how many contracts get printed, no matter how large the orders, delivery would never really be demanded by the masses. But that myth just died. As physical demand spikes and inventories vanish, traders and institutions are waking up to a devastating realization. The COMEX isn't a vault, it's a betting parlor. An empty box, filled with paper promises no one ever expected to be fulfilled. And now, those promises are being called in all at once. This isn't a shortage. This is an exposure event. It's revealing just how few actual ounces are backing billions in open interest. Analysts have warned about this for years, how a small shift in confidence could lead to a stampede toward physical metal. And now, it's happening. Delivery requests are soaring. Futures contracts are no longer being rolled over, they're being stood on. And as more players demand metal instead of cash settlement, the system is starting to buckle. With only 35 million ounces left in registered COMEX vaults and delivery demand swallowing tens of millions in days, the margin for error has vanished. One large player standing for delivery at the wrong moment could set off a cascade of failed settlements, emergency rule changes, and a market-wide loss of trust. The COMEX, long seen as the heartbeat of the silver market, is now being exposed as a hollow shell, an empire built on leverage, now facing a reckoning.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active.
I would just simply say that if a market loses trust in how prices are discovered, or if it can quickly shift the rules, so too will the price discovery. Will shift elsewhere. And to me, all roads lead to the same place, and that's Shanghai, which becomes the price mechanism for physical silver. It will take over for the COMEX. And, you know, when you play these games, we've seen it now in London with the nickel market. We're seeing it here. It's what they did to the Hunt brothers. They changed the rules. They'll raise margin requirements. They'll do all of these things. But when you end up seeing, when you end up seeing a failure of trust, a massive breakdown in trust, I believe that shift will happen. And, it will kind of be like London losing its grip on oil pricing, and move to the NYMEX. And, they ran it for a long time. Now they're an afterthought. The same thing will happen here, I believe, that the world will be so angered, if you will, by the fact that this has been a game that has been played for a long time by the West, that it will move to the part of the world that, the center of gravity will move towards Asia, I guess is what I'm trying to say. So, yeah, I think that that's going to happen. I don't know when, but ultimately, in a world of probabilities, I'd put a high level of certainty on that at some point, it just moves to the part of the world that is cash and carry instead of promises and rehypothecation. In other words, you buy in Asia, you pay your money, you get your bars, and out you go. And before you buy it, you have to buy a bar from one of the pre-approved refineries, and they laser etch the number of the contract that you have on that bar. There is no shenanigans there. It's all about shenanigans here in the West.
And that reckoning isn't just coming from inside the system. It's being driven by a force the West can no longer ignore. In what could go down as one of the most pivotal moves in silver market history, a powerful Asian trading entity has just demanded over 400 million ounces of physical silver. That's not a typo. 400 million. More than 10 times what's available in registered COMEX vaults. More than what the LBMA could spare without triggering a panic. And this isn't an idle request. This is a strategic play, a coordinated bid for control over the physical silver market itself. For years, Asia has been accumulating metal in silence, draining the West ounce by ounce. But now, the gloves are off. This mega bid exposes just how brittle the Western pricing system really is. Because when one player can demand more silver than both COMEX and the LBMA can deliver combined, the message is clear. The power to set the price is shifting east. China, already the world's top silver importer and a dominant industrial user, is consolidating its control. They're buying d'Or at premiums, locking in long-term supply, and classifying silver as strategically critical. And as this physical demand grows louder, the West's ability to suppress prices through paper games gets weaker. This 400 million ounce ask isn't just a trade, it's a declaration. The East is no longer playing by the West's rules. They're making their own, and they're backing it with metal.
Well, you know, it's interesting. The technical analysis would say you take the cup and handle when it breaks through the handle, which it has over $50, that you take the top of the cup in 1980, which was 50, the bottom of the cup, which was $4 in the 90s, and the difference is 46. You add it to the top, and that would say $96 would be the next technical resistance level, if any, or that would be the projected next place to go. And if you take a 42-to-1 ratio right now, or even call it 45-to-1, where it's averaged for the last 100 years, the silver to gold ratio, even though it's been coming out of the ground for 5,000 years, it's 16-to-1, and now it's 7-to-1, meaning it's depleting in nature. The price ratio, largely because of, in the Western world, gold's role as a monetary metal and silver's role in industry, it's average about 45-to-1. So you take gold today at 42.40 and divide by 45, and what do you get? 42.40 divided by 45 is $95. Well, isn't that interesting? That would be where it would tell you to go, where you take the top minus the bottom, which is 46, add it to the top, that would say $96. So, I mean, if you were to see silver at the end of the year at $96, it would not be crazy at all. And if you take 42.40 and divide by 7, it's going to be somewhere around $600, 605. As insane as that sounds, that would match the geologic footprint right now. So yeah, I think silver is the asset of a generation. And I want to always hammer it home. I'm not telling people to buy it to become wealthy. It is wealth. And the biggest money in the world is showing you that. The sovereign wealth funds and the central banks, who have now largely reclassified silver a critical mineral. The U.S. government has. The EU did it in 2023. China just did it, and they are restricting exports. And China, as we've said ad nauseum on your show, the second largest producer in the world, is flying to Peru and Mexico and buying doré and concentrate, paying twice what the rest of the world will, and ship it back to refine it. If they're the second largest producer, then why the hell are they doing that? Because it's worth far more than the currency used to buy it. The prices are wrong. They've never been allowed to reach full price discovery when you have the largest concentrated commodity, concentrated short position of any commodity of the 1,000 plus traded on COMEX for years. It just speaks to the why. Why would it be the largest short position in this tiny little commodity? It's not for these banks to make money, is it? Sure, they do, but is there something bigger behind it? And we've talked about that forever. So yeah, what we're witnessing right now is the inability of the players that have used the Western dominance, which is big checkbooks, big pockets of cash, to continue to suppress the price naked. It's now an existential threat. And you're seeing that. The rumor is the reason they stopped is there's one big trader who took possession and would not roll it over a stamp for cash delivery, perhaps an Asian trader who wanted over 400 million ounces of silver. Give it to me. And so, all of a sudden, the cooling breaks down over Thanksgiving in one of the most thinly traded markets of all. So there's virtually no activity, but just those servers broke down. Right. So the point of it is that this signals, just like the LBMA said, sorry, it's not L plus or T plus 1, it's T plus 8 weeks. Right. We don't have enough manpower or trucks. The Western system is crumbling under their own narrative, and they are losing trust. And that ain't good when a system is completely built on trust and it starts to, as the water recedes, what's the old adage?
The shockwaves from that move are now ripping through London, where the LBMA, the last major Western pillar of silver storage, is running on fumes. For years, the LBMA has acted as a silent enabler of the paper-silver game, with massive vaults giving the illusion of abundance. But beneath that polished surface, the cracks are spreading fast. Physical outflows from London have been relentless, with millions of ounces quietly shipped eastward month after month. By late 2024, even mainstream analysts began to raise red flags as available silver stockpiles shrank dangerously close to operational minimums. And now, with COMEX buckling and Asia aggressively soaking up global supply, the LBMA is being pushed to the edge. Their once comfortable buffer is gone. They're being forced to dig deeper into unallocated reserves, moving metal between accounts just to meet basic delivery obligations. It's a game of musical chairs, and the music is slowing down. The unspoken truth is that the LBMA, like COMEX, has always operated with a fractional system. But with physical demand now in full revolt, there's nowhere left to hide. Vault audits are under scrutiny, allocated clients are demanding verification, and confidence in the system is eroding fast. This isn't just a supply issue, it's a credibility crisis. And as more institutions and sovereign buyers realize that London's vaults may be just as hollow as New York's, the final leg of Western price control is beginning to buckle.
Right, right. And I think that's going to be a grotesque picture before it's all said and done. And that's why I think you're seeing a different narrative unfold amongst these banks that maybe the game is over and survival would mean breaking ranks and covering and getting out. You see one of those European banks do that, and then the whole game just implodes as the price skyrockets and shorts get squeezed and they cover, pushing the price up higher. This is a big deal, and I think it's just beginning right now. I mean, you mentioned a deflationary spiral, but what about inflation you're talking about? You measure any asset you can think of in terms of ounces of gold over the last 50 years, and prices are falling against gold, against the real measuring stick. Against the dollar, they're going the other direction, and it's that the dollar is falling too. And so it's a situation where you're right. Anytime you suppress interest rates. I think that's the issue that got the whole world into problems. You suppress interest rates, and that creates distortions and excuse me, all of the asset prices that have never been allowed to find real price discovery. And it tells me that the assets that have been pushed higher, when real price discovery comes into picture in an environment of higher interest rates, it will be a religious experience for a lot of people. And at the same time, those assets that have been held down, conversely, like precious metals, it'll move in the other direction exponentially when they are free, not only from manipulation, as we're seeing the problems on COMEX and the LBMA. You manipulate prices for too long, the physical demand will put you out of business. It will bankrupt you. And I think the big money understands that. And on the other side, maybe this is why you see Buffett in 400 billion in cash, and why you see all the insiders selling every single week, 2 billion a week for the last, I don't know how long, and Bezos and Zuckerberg and all of these people selling. Maybe that's why, because they know what's coming. When price discovery really truly is allowed to manifest itself in a world where money isn't free anymore, and the ramifications of it start to profoundly expand. Very quickly, I think not only will you see those assets that are ridiculously priced start to deflate, but you will also see those that have been suppressed move much higher, as there are very few safe places left yet to go. And maybe that's why we're seeing these massive deliveries. The people at that level of wealth and sophistication don't do it just for the hell of it. They know what's coming. They're 2 or 3 steps ahead of everybody. That's why I would say do what they say, don't do what, or do what they do rather, don't do what they are saying. But it takes so much effort to figure that out that if you're not researching the way you and I do every day, you won't even see it. And it will just be one of these things you'll wake up one morning and say, my God, can you believe how high gold and silver have gotten? In fact, I got one today. I got a text from my buddy, Steve. I call him Flip. And he says to me, I just saw the silver prices today. Wow. How high do you think it's going to go? I should have bought when you told me to at 22. Well, that's exactly what you're going to see happen. I think it's going to go much, much higher, and people will just wake up to a new reality. And at that point, the big money will have already been long since positioned.
And when that buckle turns into a break, it's the banks holding the short end of the stick. Literally. For years, a handful of powerful financial institutions have quietly amassed massive short positions in the silver market, betting that they could suppress the price indefinitely through sheer leverage. It worked until now. With the physical market spiraling out of their control and delivery requests multiplying, these shorts are quickly turning toxic. Just look at the COMEX futures data. Managed money traders have been overwhelmingly net short, and commercial banks are on the hook for billions in potential losses if silver spikes. This is the powder keg beneath the surface, because as soon as the price begins to rise with momentum, these short positions will have to be covered. That means forced buying. That means vertical price action. And it means a reflexive chain reaction where every uptick adds pressure to the system. But it doesn't stop with futures. The iShares Silver Trust, SLV, has seen soaring short interest as well, despite supposedly being a physical-backed ETF. Retail and institutional players alike are betting against silver, completely unaware that the foundation they're standing on is crumbling. Analysts like Ted Butler and David Smith have warned for years that the moment this short trade starts to unwind, it could turn into a full-blown squeeze. One so violent, it could vaporize decades of manipulation in a matter of weeks. And now, with inventories draining, Asia buying aggressively, and the COMEX exposed, that moment is drawing near. The silver short trade isn't just risky, it's a ticking time bomb.
Same way that, well, similar. In Texas, they're kind of leading the charge on this. The idea is you take your American-made coins, you deliver them to a state-run depository. I don't know if it'll be the Texas Bullion Depository or someone different, but in essence, they will give you like a credit card or an app on your phone that you can then make purchases using it in a digital framework. I think the idea of going to a shopkeeper with Gold Eagle is probably not going to happen, but using those coins, which most of the laws specifically say American made, not all of them, but a lot of them do, held in a vault that you can then keep your purchasing power safe from the continued fall of the dollar in terms of its valuation, down 100% against silver this year, pretty damn well near it after today's run, and 70 plus on gold. Forget about the dollar index. It says it's only down 7 or 8%. It's down 15 times that just about in terms of silver, and 12, 13 times in gold. And so you end up with a situation where you can use money, but it is done in a digital ecosystem, would be my guess. And maybe it's something like we saw recently in Italy where, desperate governments do desperate things. They're saying, tax now or later, any gold, jewelry or coins or bars that people have not declared in terms of, or there's, that no one knows about it, you can tell the Italian government now and pay your taxes now. Who knows what they do? Desperate governments do desperate things. I just think that you have to prepare the best you can, hope for the best, and be prepared for it not to work out that way. And what other choice do we have? I'd rather have options when others have none. But yeah, it is something certainly worth considering. And at that point, the United States loses all credibility as far as I'm concerned, if that ever happened. But look, they are forcing us into this digital surveillance state. Starts with the digital ID. Well, Trump already said that's what he wants, or passed that law for voting integrity, right? What is it? And again, I always butcher these, but Ben Franklin said something to the extent when you give up a freedom in the name of safety, you never get it back, right? Well, that's the freedom we're giving up because of the election integrity. You have to have a digital ID. That's the foray into the surveillance state. The next is the money. No, it's not a central bank digital currency. It's run by third-party entities. Oh, well, then we're safe, right? And you can see how we are quietly dropping the frog into the pot of lukewarm water and slowly turning up the heat. What it appears to me is that is where we are going, and you do the best you can to stay out of it. And everything that you're doing is legal. You got that on your side, and you hope for the best. It's a very small percentage of people that will have that ability. Maybe it's not worth it to rattle the bushes because most people wouldn't know a gold coin if it fell on their big toe.
And behind that ticking bomb is something far more powerful than just investor sentiment. It's national strategy. Silver is no longer just a monetary hedge or a speculative play. It has become a critical mineral in the geopolitical arms race, and the countries that understand this are moving fast to secure every last ounce. China may not have added silver to its official critical minerals list yet, but their actions speak louder than any policy statement. They are the world's second largest silver producer, yet they are also the #1 importer. Why? Because they know that without silver, their industrial dominance falls apart. Solar panels, electric vehicles, 5G infrastructure, AI chips, these aren't just the future, they are the now. And silver is the metal that makes them all possible. In 2024 alone, China's industrial demand for silver was projected to hit 261 million ounces, with nearly 100 million of that tied directly to photovoltaic technology. They are paying premiums to secure door and concentrate shipments from Latin America, locking up long-term supply at the source, while the West debates policy and watches inventories dwindle. The US, Canada, and the EU have only recently woken up, classifying silver as critical, but they're already behind. This is no longer a market dictated by investor flows. It's a battlefield for strategic control. And in this new landscape, silver isn't a trade, it's a weapon.
Quick, because remember, like if you were to go buy a new Lexus at the Lexus dealership and they're like, okay, well, we can't take a check from you, Dunnigan. I'm sure you're an honest guy. We need a wire. Okay, I'll be right back. I'll run to Wells Fargo. Well, now you can just go, boom, just like Zelle. It's in your account. Thank you. Let's go. Can I have my car? It's expediency also, and it's, convenience. That's what they'll tell you. It's far more convenient. One last point. Sorry to interrupt you. There was a poll taken I read, and I read it with great disdain, that 60+% of Gen Zers say cash is cringe. No one takes cash. It's cringe, whatever the hell cringe means. But I'll tell you that we are moving to in that vicinity, that cashless society that we talk about, that always people laughed at. Yeah, that'll never happen. It is happening ever so slowly. And this will be another example of it. So you're right. I don't think there will be any opt-outing, and cash will be something that will go ultimately the way of the dodo bird, and it will just be gone. But
that weapon is now aiming squarely at the outdated pricing mechanisms the West still clings to, starting with the gold-silver ratio. For decades, this ratio has acted as a pressure gauge, flashing red whenever silver becomes historically undervalued. And right now, it's screaming louder than ever. At the start of December 2024, the ratio sat around 78-1, meaning it took 78 ounces of silver to equal 1 ounce of gold. But history tells us that during true silver bull runs, this number collapses. In 2011, it fell to 31-1. In 1980, it hit 16-1. And geologically, the natural ratio is closer to 7-1. That means one of two things has to happen. Either gold collapses or silver explodes higher. And with gold now trading near record highs, the direction is obvious. Silver isn't just lagging, it's coiled. Ready. The market has been ignoring this signal for years, but the conditions are now aligning in a way we haven't seen in decades. COMEX is strained, LBMA is vulnerable, Asia is buying relentlessly, and industrial demand is accelerating. If the gold-silver ratio simply reverts to 45-1 with gold at $2,400, silver should be at $53. A move to 16-1 implies $150. And the geological target of 7-1? That's where the $600 number starts to look disturbingly realistic. What we're witnessing isn't just a shift in price. It's a repricing of silver's role in the global financial system. The ratio is the canary in the coal mine, and it's already choking.
well, I think it's all intertwined, because Bo Hines, who was Trump's crypto advisor until August, is now the CEO of USA Tether, which is already Genius compliant and will get the lion's share of all the stablecoin issuance backed by U.S. Treasuries, which, to your point, gives synthetic demand for the Treasury. But the interest on those coins is not transferable. If you buy something and the stablecoin is created backed by treasuries, you spend it, the stablecoin gets burned, it's done. But the interest that was generated on the treasury is not transferable to the holder of the stablecoin. It has to be kept by Tether, who then is buying gold. They have almost $13 billion in gold. They were just at the Beaver Creek Mining Summit. So there's a lot to say about the stablecoin in terms of the ultimate benefit to the gold holder, which devalues the dollar, which we've talked about. That's what they want. The debasement trade. You haven't seen mainstream talk about the debasement trade. Makes paying off your debt easier. And we've talked about how they could develop a roadmap to bring back manufacturing. That is a key part of it. The continuation synthetically of demand for the treasury market, which has lost demand and is continuing to lose demand, but that synthetic demand will then be used to take the revenue from it, drive from it, not give it back to us who hold the stable coins, but buy gold with it. And I wouldn't be surprised if there was a wink, wink, nod, nod between Trump and Tether. You're going to give us that metal. You're going to sign a contract discreetly, maybe even through this exchange stabilization fund, and you're going to sell it to us at some point. Maybe. But anyways, I digress. When you talk about what it could have in store for you, yeah, they have AML, KYC, and KYT compliant technology built into the software. Know your client, KYC, AML, anti-money laundering, KYT, know your transaction. They will know who you are, where your money came from, and what you're buying. And you're right. It is a central bank digital currency masquerading as a stablecoin. The big difference is that instead of it's the CB, there's no central bank. These are independent third-party companies. But isn't it interesting that Trump's crypto czar is now the CEO of this new division that is going to issue the USA Tether tokens? Interesting how that plays out. It's just as interesting as Goldman Sachs saying if the Fed loses independence and the market gets whiff of it, gold will go to the moon. Well, who just took the vacated spot? Stephen Mirren, the head or the gentleman who wrote the Mar-a-Lago Accord, Trump's advisor. These things are not by mistake or by accident. They're by design. And so, to your point, yes, it will have, I believe, all of the characteristics of a central bank digital currency only issued by a third-party entity, that the feds will control the on-ramp and the off-ramp. And so it's the same thing in essence. And I think people should be concerned about it for sure, but it is here and it is going to happen. It is the only way that they will achieve, I think, what they're trying to do through devaluation of the dollar and keeping interest rates low synthetically on both cases. And that devaluation of the dollar will be through the continued increasing purchases of gold and silver with the proceeds behind those stablecoins that are backed by treasuries. The interest on those treasuries not transferable. It's a huge deal, but to the average person, yeah, I think you are just as surveilled as if it were a central bank digital currency for sure.
And as that ratio begins to unwind, the first major milestone is already coming into view: 96 silver dollars. It might sound like a moonshot, but in the world of technical analysis, that number is more than just a headline. It's a calculated target. Analysts have been watching a decade-long cup and handle pattern forming on silver's chart since the 2011 peak. It's the kind of pattern that doesn't appear often, and when it does, it usually marks the beginning of explosive moves. The breakout above $30 in 2024 confirmed what many had suspected. Silver has finally escaped its decade of suppression. And now, the technicals are pointing to a full measured move, right to that $96 level. But here's the key. That's not the ceiling. That's the floor of what comes next. The $96 target is just the first major resistance zone, the point where early momentum traders and institutions will likely step in. But by the time the masses notice, the window will be gone. Remember, the last two silver bull markets, 1980 and 2011, saw parabolic moves that went far beyond expectations, with gains of over 800% and 400% respectively. In those cases, silver didn't pause at technical targets. It shattered them. And this time, the setup is even stronger. There's more monetary instability, deeper supply deficits, and greater industrial demand. The $96 call isn't sensational, it's mathematical. And it's quickly becoming the floor of a much higher ceiling.
Well, I don't know if it's even defending anymore. It seems to me that this is what they want to do. This is their decision to do this by raising rates. The opinion is that they're going to raise rates again here in December and probably in January. And the truth of the matter is their economy is under serious pressure. And this could seriously affect global markets harder than people expect, because for years or decades, interest rates were kept near zero. And all of the money, whether it be Japanese pension funds or traders around the globe, would borrow, for example, yen at near zero, and then use the excess or use that free money to buy things like U.S. government bonds. And so there's over $1 trillion worth of these bonds that are owned by the Japanese pensions that are now, when you factor in the carrying costs and a rising yen and higher rates, these bonds are now basically underwater and they have to liquidate, and that's what they're doing. This kept the yen weak. It kept the dollar strong. It kept money flowing around the world, but it also is now coming home to roost, where these higher yields that you're seeing in Japan, along with inflation rising in Japan, they're under pressure to raise rates, and they're doing it, and that'll make the yen more expensive to borrow, which makes those already unprofitable carry trades even more unprofitable. And I think these funds and investors are now unwinding their positions. They're selling their bond holdings, and they're bringing everything back to Japan, which is going to put massive pressure on the bonds in existence and the currencies around the world, because it's been a piggy bank to the world where you could borrow at nothing and buy Nvidia, Bitcoin, treasuries, anything. And that has been, Japan needs to bring back this money to support its own economy. And it's going to start doing it by selling bonds. And the question is, how quickly will it unwind? Will it send the dollar crashing? Will it send rates spiking? And when you realize, again, going back to that same thing about trust, that the whole U.S., the whole system is already under pressure. I think this has the potential to trigger massive financial problems if the unwinding of the carry trade is anything other than orderly. And rates are going higher in Japan, would be my belief.
But this story goes far beyond technicals and short squeezes, because what we're watching unfold is nothing less than a systemic shockwave. The collapse of COMEX, the drain on LBMA, the Asian megabid, the industrial demand explosion. These are not isolated events. They are symptoms of something much larger. A global financial system that is losing credibility by the day. For years, the dollar's strength has been measured by the DXY index, comparing it to other fiat currencies. But that's a distraction. The real measure of a currency's value is what it buys. And in 2024, the dollar lost ground to everything real: energy, food, and especially silver. Measured in ounces, the dollar is collapsing. And now the world is beginning to notice. Nations are hoarding gold, central banks are cutting exposure to treasuries, and commodities are becoming the new collateral. In this new environment, silver is more than just a metal. It's a truth serum. It exposes the weakness of fiat, the fragility of derivatives, and the illusion of infinite liquidity. And once the veil is lifted, trust doesn't return. That's why silver's rise isn't just a price movement. It's a trigger, a cascade. Because once confidence in paper assets breaks, the system has nothing left to stand on. We're not just looking at a silver bull market. We're looking at the unraveling of a monetary regime. And that unraveling is accelerating toward its final phase, where silver isn't just repriced, but redefined. $96 was the starting gun. But the real endgame? That's where silver hits $605. Not as speculation, but as necessity. It's the number that emerges when the paper pyramid finally collapses and the market is forced to reckon with reality. At a 7-to-1 gold-silver ratio, with gold at $4,200, an increasingly realistic target in a world of currency debasement and capital flight, silver at $600 isn't a fantasy. It's the logical endpoint of a system that's run on leverage, illusion, and delay. Every pillar holding back silver's true value is cracking. The COMEX can't deliver, the LBMA is bleeding, the short positions are unsustainable, and the East is outmaneuvering the West on every front. And as confidence implodes, demand for real, physical silver, not promises, not contracts, will overwhelm what little supply remains. In that world, silver doesn't just catch up, it overshoots. It becomes the asset of last resort. And those who saw it coming? They'll be the ones standing while the rest scramble. So if you've been waiting for the signal, this is it. Subscribe now to stay ahead of the curve, and remember, this is not financial advice. Always speak to a licensed professional before making any investment decisions.